Now, I'm going to get some slack for saying this, but I'm going to say it anyways. Credit scores are important, but they're not true safety nets. Yes, your credit score matters, absolutely. It helps you to secure a mortgage, car loans, and sometimes you may get better rates, but credit scores are not wealth. All a credit score proves is you may or may not be good with paying folks back. You can have a 760 credit score with $200 in the bank. That's not winning. You can have a 680 credit score with $15,000 in the bank. You'll be in a much stronger financial position than the person who had a 700 or 800 credit score with little or no savings. I like to think of it like this. Good credit is about access. Good savings is about stability. Because in crisis, Visa, MasterCard, Discover, or American Express won't ultimately save you. Your safety net will, and your stability will. And unfortunately, many people have been conditioned to obsess over a credit score, tracking it like it's a badge of honor. But if your savings account can't even cover a $2,000 emergency, then what are we really flaunting? Your credit score shows how well you can borrow. Your savings shows how well you can survive. So don't just build a beautiful credit score, but also build a sexy bank account. So when a $2,000 or $5,000 emergency takes place, the posture of your bank account says, how may I serve you? Look at your bank account today. Does it say, how may I serve you? Or does it say, I can't support you? And regardless of what it speaks back to you, make a decision today to say, I want to continue to build my bank account so it can one day have the posture of a servant. And if you're listening and your bank account says, I can't support you, make a decision to say, I'm going to do what it takes to change the language and the posture of my bank account. Borrowing only will not be the story of my life. I'm going to bit by bit stack my bread consistently. And consistency is the key word. $75 a month, $100 a month, $150 a month. I'm going to consistently stack it and never touch it until it speaks to me and say, how may I serve you, especially in our most vulnerable, unexpected moments. Stop staying in survival mode just to have enough or barely enough. Have a high credit score and have a high bank account currency. Tighten up, discipline yourself so you can build and live in the overflow. Most people think that a credit card or a loan replaces the need to build an emergency fund. So think of it this way. In a moment of an emergency, you're already stressed. Don't add debt to stress because you're only compounding the stress that you're already under. Because instead of solving the problem, you're layering stress because the debt does not care why you borrowed it. Credit cards and lenders don't ask why you need the money. They don't care if it's for a death in the family. They don't care if it's for a hospital emergency visit. They don't care why you borrowed the money. All they care about is lending you the money so that they can make more money off of our unpreparedness in case of an emergency. Because these lenders know more and more people are not building emergency funds for their own safety net. So instead, they pose as a temporary answer attached with interest, knowing that you'll pay them more than what the emergency originally cost you. And they also know that more and more credit card holders don't pay off their balances before the billing cycle ends. And now you owe interest and monthly payments on top of the original emergency. So borrowing isn't a safety net. It's a trap disguised as a solution. I want you to answer these questions for yourself. If a $3,000 emergency happened today, what would you reach for first? A credit card or your own cash? If I lost my job today, how long could I cover my bills without using a credit card or getting a loan or borrowing money from someone else? These emergencies never wait for perfect timing, and debt doesn't offer compassion. You don't need more credit. You need more ownership over your future. Your emergency fund should never, ever, ever be locked in a CD, because CDs have terms and conditions where your money is locked in until the CD matures. And if you have an emergency and all of your money is locked in a CD, now you have to pay a penalty to get to the money before the maturity date that you agreed upon. And not only that, in the case of an emergency, the last thing you need to do is be on hold to wait in line to speak to a representative or chat with an agent for you to get to your money. So if you're wanting to utilize a CD to grow your money, always make sure you only invest the excess amount of your emergency fund, never the whole thing. Now to my real estate peeps. I've heard quite a few of you comment and say, emergency funds aren't necessary because my cash flow from my real estate covers me. That's true. But it's also incomplete because your cash flow is only as reliable as your tenant's income. So if your tenant loses their job, guess what else disappears? Your rent payment. So what happens if your tenants are impacted by a job layoff with no severance and they have no emergency fund of their own? How will they pay their rent? How will you receive the rent payment that adds to your cash flow? And the better question is, how do you cover the mortgage, taxes, and insurance and maintenance while you or your property manager looks for a new tenant? Because here's the reality. Companies are downsizing and layoffs are happening, and tenants, even great ones, can fall on hard times fast. So while yes, your rental income may be fine for now, and perhaps it may have been fine for the past couple of years, but one thing I do know about real estate and investment properties, you gotta think and plan ahead. Because in real estate, it's not just about owning assets. It's also about protecting your cash flow and your overall stability as a real estate investor. So having an emergency fund is that much more crucial for you. Now, the cash flow is amazing, but a doggone show ain't bulletproof. Your emergency savings is what gives you the margin to keep going when things go left. So don't just protect your property, protect your plan too. I gotta make sure that I say this clearly and that I take the time to unlayer this properly, because this makes me kind of squirmish. Because I've seen real estate agents inform their potential clients that they can use the money in their 401k to put down a down payment on their home without penalty. And if you're listening and you've done this, or you're listening or you know someone that's about to do this, make sure you watch this and listen carefully, because I want people to be careful, to be aware, and be fully knowledgeable before they do this. There is a difference between you can take money from your 401k to put a down payment on a home penalty free, versus you can borrow money from your 401k to put a down payment on a home penalty free. And when this is repeated or relayed to someone, take and borrow are exchanging the communication. So I want to make clear that you are borrowing, not taking. Taking means you don't have to put it back. Borrowing means you must put it back, which means you must make regular payments to put it back over a specific period of time according to how the loan has been structured. So when I hear people say, oh yeah, you can take money from your 401k, I go, wait a minute. It's not take, you're borrowing it. And I want my listeners to be fully aware of what this is and the stipulations behind it. Because if you leave your job, whether you are fired, whether you retire, whether you're laid off, or whatever the reason is, review the tiny print and the exclusions that comes with it. Because typically the outstanding loan balance of whatever that amount is usually due in full as quickly as 60 or 90 days of your departure. And typically most new home buyers get overly excited to start furnishing their home, using credit cards, or already have a credit card balance going into the home. They may have a car payment going into the home, and now you have a mortgage, and on top of that you have this repayment back to your 401k. You're suffocating, and one wrong move can make you go under just like that. So be mindful of this method. Sit down and talk with a financial professional so that they can help you review the full ins and out of your particular 401k plan, because not all terms and conditions to borrow are the same. This helps you to make an informed financial decision that sets you up for financial success on the front end and not backfire on you on the back end. You got to stop waiting for someone to come save you and stop the avoidant behavior, because I always say you're praying and asking God for a break. But meanwhile, what discipline have you put in place to show God he can trust you with a break? What have you given or given up to show God I can be trusted with more? Because God won't move until your discipline does. God won't open up the overflow until you stop running from what you don't want to face. I always say, many people say, I'm waiting on God. And meanwhile, God is saying, I'm waiting on you to be disciplined. I'm waiting on you to sacrifice. I'm waiting on you to stop the avoidant behavior. I often sit back and I self-reflect and I say, if I want God to bless me with 10,000, I got to at least meet him halfway to put up 5,000, because he's going to see and honor my discipline. He's going to see and honor my sacrifice. He's going to see and honor me dying to my wants, me dying to the things that satisfy me instantly so that I can get to where I need to be. He's a God of order, not a God of avoidance. Hey family, I hope you enjoyed today's Wealth and Wisdom conversation. Make sure you share this with at least 10 people that you know. It is my heart's desire to make sure that I'm always giving you wealth and wisdom tips to help you navigate your future, navigate some of the uncertainty throughout this financial world. I'll be dropping more videos like this every Wednesday. Always remember, your mindset is the key to unlocking your financial freedom. It's time to leave behind what's comfortable for what's possible. All we have is now, family. So start now. See y'all next week.